Hey, good morning. Morning. It is Fed Day. It's Wednesday, December 18th, and we've got the Federal Reserve meeting, the final meeting of the year, which a lot of people are going to be waiting for and taking a look at. A few things I do want to discuss today, and one of those is the meeting. Right now, we're banking on a near 99% chance that we're going to see a single rate cut in today's meeting with Jay Powell, and then we'll see kind of what goes on and transpires into the Fed dot plot and the quote-unquote expectations for the following year. So what we got going on today, we have in my opinion at least, the expectations of a potential hawkish cut, right? What is a hawkish cut? A hawkish cut is one that, they'll cut rates, but I think they're going to talk down the cuts coming into 2025 and the expectations in the next year for the rate decisions and the monetary policy. So we've seen a pretty strong initial momentum move from these cuts starting at some point this year with that first double cut. And now we're in a position where markets are continuously printing into all-time highs, and people are a little confused as to why these cuts are happening if everything seems to be good into the markets, right? So into the end of the year so far, the last few weeks, we've seen that breadth has been just atrocious, and everyone's looking at this thing. A lot of sectors are down, while a select few are continuously holding up, and everyone's mainly shocked and surprised as to why this market hasn't pulled back more aggressively and why we haven't seen such a sharp sell-off. Overall, there is some larger net short positions that are getting eaten up, and I think that kind of sell-off, something more drastically, that is something that gets pushed along going into 2025. So we had the situation where the Dow Jones is down really aggressively right now, right? The Dow Jones has been taking a pretty strong beatdown all in all. We've had multiple, I think this is the weakest showing of the Dow Jones since I'm not even sure when. I think it's been years now when we've had multiple down sessions continued, and prices are just getting crushed right now with, a massive oversold statement right now. It seems that value has been taking a stronger beatdown, and tech is still holding things up, right? It's on its 9-day losing. It might even be more. These are the futures. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, okay, 9. So 9-day losing streak, and it's the strongest I have it right here since 1978, right? Fewer and fewer stocks are participating in the recent large cap rally, but investors and traders are still betting on tomorrow's rate cut outlook, or I should say today's, to bring the Santa Claus rally back into play. Yesterday, 1 out of the 11 sectors closed green, with consumer discretionary up 0.3%, so pretty shameful in that. Overnight, we did see an initial rally to the upside swing, but since then markets are down pretty heavily. The S&P, the SPOOs are down about 20 handles in the past 30 minutes or so. The Nasdaq's down about 100 handles in that same time. So right off of the pre-market, right before the market's about to open, this thing gets beat down pretty severely. And what can be considered a reasoning behind this 9-day down streak on the Dow Jones? It's the longest stretch, like I've said, since the late 70s, 1978, and United Health Group, the second largest component of the price-weighted index, is driving the weakness. The stock came under pressure over concerns that the incoming Trump administration regulatory overhaul will cut into healthcare profits. And it's not just that United Health that's falling, it's the healthcare sector in general. You can look at the ETF XLV, for example. If we you can look at UNH first. UNH, massive downside momentum move. And you look at XLV, which has been on a treacherous downward slope as well. Is down about 13% since the September high. Many investors remain cautious about the industry's prospects. Still, despite a decline in its leading stock, 66% of StockTwits users polled to see United Healthcare's weakness as a buying opportunity. Just with that information, I feel like it's not there just yet, right? I think that realistically, we're going to see a little more downside trickle until big money starts stepping into this thing. Right now, XLY, which is considered like the growth sector, if you will, is up the most since the start of December. It's up about 7.5%. You have XLC, which is consumers, and you have XLK, which is tech, which are both up about like 2.6, 2.7%. And then the remaining, right, 8 sectors are currently down, with energy down 9.7% this month alone, which is the biggest loser currently. So we saw a decent rally here in the overall markets, right? The SPY is still holding out into these highs. It's just kind of rotating, creating what some might call a bull flag, if you will. But the Nasdaq overall has been showing a lot of strength, and today we're trying to pull down below the prior day's close, and a lot is going to be on the wire for Jay Powell, right? A lot of eyes are going to be on Jay Powell to see what he's got cooking from there, because this market right now, pre-Powell, is taking a pretty big hit, and we're expecting to see kind of maybe some sideways low volatility movement going into the event, and then we'll see kind of what shapes up from there. So we also had some pretty big news on the overnight session with a new partnership between Honda and Nissan in the middle of it's in the middle of being ironed out right now, which would save the latter from likely bankruptcy in the coming year. It's not yet clear what things would look like, but Mitsubishi Motors, of which Nissan is a top shareholder, is also likely to come aboard to the new industry giant. And whether it's a merger, alliance, or capital tie-up, or even a broad holding company, the new entity would split Japan's auto industry into 2 camps, the one of Honda that includes Nissan and Mitsubishi, and the other one in Toyota, which includes Subaru, Mazda, and Suzuki. Earlier this year, Honda and Nissan agreed to cooperate on electrification and deepen those ties in June with batteries and software, as well as inking a similar agreement with Mitsubishi Motors. Like most consumer devices and appliances, cars have been getting a lot more intelligent, a lot smarter over the past decade. This has led to a race to the top. The software-defined vehicle market, SDV, putting those that fail to modernize their underlying vehicle architecture at a disadvantage or even near bankruptcy. It's been a hard time for many legacy automakers to balance these needs at a time when they've spent billions on EV transitions and leading to a new partnership like Rivian and Volkswagen that can keep them competitive in the modern era of automobiles. You saw like what happened as well as with Jaguar recently, the new woke Jaguar ad that had everyone up in arms, right? There's similar concepts going on everywhere, it seems. So the new players on the road have mastered SDV market and electrification, and even the forces that have created it. Think dominant names like Tesla and China's BYD, which are known for their innovative and over-the-air updates where features can evolve long after their cars have left the assembly line. They've also been leaders in bringing production and development in-house while maximizing profit margins by securing their supply chains from components to batteries. So a partnership between Honda and Nissan is aimed to restoring global competitiveness, like China, which accounted for almost 70% of the worldwide EV sales in November. Once a pioneer with a mass market Leaf, Nissan will gain stability as well as a better reputation and financial standing from the new tie-up. Some are questioning the potential benefits for Honda, but it could see cost reduction from shared platforms, better investment in new technologies, and an acceleration in the EV plans. Whether the two can combine their different corporate cultures remains to be seen, with Honda shares down about 3% pre-market, and Nissan surging 24% in Japan to become its top performer on the Nikkei 225 today. So, like I said, the main piece of news information that's expected to come out today, all eyes on Jerome Powell and the Fed, after this decent downside momentum move, right, being taken out on a lot of these longs right now. We'll see how that kind of holds out, but not looking too pretty for the continuation of the longs. Realistically, I still like the idea of longs trying to come out, but I think it's more of a venture of if we can actually move above 6135 on the S&P. We've got this like P-shaped low volume area, and we're getting very, very, how do you say, like, well, I guess exhausted of buying this like 61.15. It's just ongoing and ongoing without an attempt to make a new high, right? It's a matter of, can we actually just like accept these distributions higher? Can we go above 61.45? Can we start accepting those areas to promote some of this upside momentum to potentially take prices higher? So today, again, like yesterday, we had 61.35 as the key metric to see if we can sustain some of that downside, right? It was a key pivot. It's going to be a key pivot for today's session as well. And it's a matter of, can we move above that? Otherwise, I don't necessarily see too much bullishness trying to come out and support this market here today, right? A lot can change with Jerome Powell. Don't leave that out, right? We could probably just see like slower and shittier movement throughout the day. And then Jerome Powell comes in, Fed, right? We see a dot plot, we see the rate cut, XYZ, things change naturally. Or it could be a complete dud, right? It's into the end of the year. Who knows at this point? But I think that markets are awaiting, traders are awaiting to see how this thing kind of shapes up with a very, very tired market. It seems like they're still just holding it up by a few little strings here and there, but it's a very, very tired market right now, and it needs to get a new jolt of buy side. Otherwise, like, you start cracking levels below, fair, right? That's why one of the main reasons why I'm not like super bearish on this and trying to pick out areas where the buy side can actually sustain and hold out is because we haven't necessarily been able to crack some of these key areas to accept auctions to the downside. So far, everything that's happened, everything that's been going on is just that, like, you're getting rebids continuously. Big buy side comes in and sweeps orders higher. So we'll see how that shapes up. Let's open up our live trade room today, and I'll see you guys in there. Let's do it. We'll wrap up tomorrow, see what Jerome Powell did on the session, and happy